Technical indicators are just a waste of time right now when you're trading options. Don't even bother using them. Well, you know what? That's what we've been hearing. With market volatility elevated, we're seeing a lot of retail traders falling into the trap of thinking we're now seeing a new normal. So we've heard from numerous traders over the last few weeks, and they've said that technical indicators no longer matter when they trade options. What they're saying is all that matters is that the Fed controls the markets in both directions. Well, the problem with this line of thinking is we heard the same thing last year when the markets were going higher. Traders were talking about how the Fed would rescue the markets at any sign of trouble, meaning stocks are going to just head higher indefinitely. What we've seen in both of these cases, there's never a new normal in trading. Hit like, hit subscribe to our channel. Any questions or comments, pop them below. And again, there's never a new normal. Markets have always and will always move up, move down, move sideways. It's crucial to keep your emotions out of your trading as much as you can. Right? Price action on the charts is going to tell you everything that you need to know about what the markets are doing. So let's take a look at how just focusing on the technical levels on a chart has made a huge difference. Right? SPY. We've seen big moves in both directions on SPY over the last few months. Just look back at the middle of August, we saw markets plowing higher off the June lows. We had a lot of stocks that were just trading in strong uptrends. But this was the point that we started hearing from traders. The downside no longer mattered. We could just get another big move higher. However, look at the daily SPY chart here. Look where price stalled out on August 16th. Was this just a random level, not associated with any technical indicator? No, we actually touched the 200 period simple moving average. So that began another wave lower for a lot of stocks. We tried moving higher again, but we tested another level of resistance at the 20 period SMA. This wasn't just another random high being put in place. This was a key area of resistance that was holding again. Price did what? It continued to head lower, and most recently tested a swing low from July 26th at $390. Now, so far, price has respected that support level. During this time, we had the Feds do what? They raised interest rates. Our economic numbers were showing signs of a slowing economy, inflation, right? Sky high numbers. The price on the charts told us everything that we needed to know about these news headlines. So do technical indicators matter? In our view, technical indicators and chart patterns can help form an opinion on market direction. And they can also provide clues as to which option strategies we are going to use. Now, it's not the holy grail, of course, but it certainly can help us improve. If you look at a simple daily chart of SPY to form an opinion on market direction, it helps put you on the right options positions. So while markets were testing the 200 SMA on the daily chart in August, we had our members positioned for a pullback. Now, the markets were strong at that time, but the technicals allowed us to filter out the news and make sure the numbers and the stats were backing what we were doing. We were able to initiate bearish positions, expecting price to pull back from an overbought condition. That's what we were seeing. Now, limiting the emotional aspect of trading, no matter what you're trading, it's crucial. Turn off the news, focus on the technicals. It's going to make you better. All media sources, what do they focus on? The fear narrative, right? They push fear. They want your eyes on the headlines. And if you aren't careful, you're going to be taking trades based on these headlines. Instead, at NetPicks, we recommend focus on a few key technical indicators for your decisions. What this will do is make you more disciplined. And you are going to be basing your trading decisions off of numbers that make sense longer term. So here's just a starting point to get you some basic technical tools in place. And these could help your decision making. On the daily chart, we track the following moving averages. These are the SMAs, 200, the 50 period, and the 20. We also use EMAs, the 200, the 100, the 89, the 50, the 20, and the 8. What we are looking for is to price to test these levels along with any previous swing high or swing low, right? It's a confluence. And then you get these levels providing potential entry points, or just provide levels of interest where you take positions off, right? We want to manage our risk. That's that simple. We think stocks, they're going to remain volatile for months to come. But if you can eliminate the news of the news cycle, there's profits to be made from trading options. You should be able to back up every trading decision. No, I'm not going to say you should. You must be able to back up every decision you make with numbers and stats. If you can't, you're trading off emotion. That's just going to lead to inconsistent results. Focus on the price on the charts. Okay, it's going to tell you everything that you need to know about how strong or weak the market is. And again, we're talking about volatility. We have a free guide about trading options during these kind of conditions. The link is down below. Make sure you click that to download to your computer. It's totally free. Hit like, hit subscribe to our channel. All right, we'd appreciate that. Any questions or comments, pop them below. We'll talk to you soon.